Though markets made a smart recovery today, the Russia-Ukraine war and increase in inflation really continues to weigh on the markets. How do you see the markets' performance in coming weeks with RBI, MPC also just 10 days from now? Udhayan.
It's difficult to project a picture where the market has major upside from here on, Nabila, because I think we have had a decent pullback already. The market collapsed to below 16,000 on the Nifty, and we are already back to more than 17,000. In fact, right now where the market's trading is almost the midpoint of the high and the recent low, between 18,600 and 15,800 and change. So some recovery. Maybe the market panicked and lost its nerve a little bit when the war broke out. And on realizing that maybe it had got oversold, we've had a pullback to 17,200, 300 levels. But from here on, given the kind of uncertainty which is still swirling around in the environment, it's difficult to suggest that there will be a major runaway rally from here on. I think the market needs to pause here and take stock of the situation. Crude prices are still very high. The war situation is not resolved. Inflation is very sticky. I think central banks still have a job to do with interest rates during the course of the year, and it's increasingly looking like one of those years where it will be difficult to eke out any kind of gains for the market. So at this point, having seen the pullback already to reasonable levels, I think the market will probably pause and consolidate here best case. If the situation does not resolve itself globally, there is room for another dip a few weeks down the line. So I think we're still in volatile terrain, and people should not get carried away to think that a firm bottom has been formed for the year. It may be for the near term, but in the medium term, it's still going to be a volatile year, and people should tread with caution. With me to talk about the kind of pullback we've seen in the market after that disastrous fall post the Ukraine war is Krishna Kumar Karwa, Managing Director of Emkay Global Financial Services. Krishna, good to see you after a long time. Are you confident enough to say now that a bottom is in place for the market, or is it too early to say that?
So then I think the data and the statistics keep on changing, and as we have no clue about how the situation in Ukraine, Russia will finally settle down. To call the bottom of the market just because stock prices have stabilized would not be the right way to look at things. For us, I think what we should look at is that the high oil prices and the impact on the corporate performances, how that behaves, how that pans out in terms of the quarterly numbers and the guidance for the next few quarters. I think that will be very important to see from a short-term perspective if we have to look at the bottom of the market. Apart from that, I think we have seen relentless selling from FPIs, and it is not only for India but for other emerging markets also. So far, we have seen that the domestic flows have been very robust, and which keeps able to absorb the relentless FPI outflows. But how long will this domestic investments come into the markets? That is also a key question to look at. So to call that the market has bottomed out, yes, temporarily, yes, it looks like. But if you look deeper into the market, which means that, okay, the headline indices seem to have stabilized. But if you look at the overall the top 500 stocks, more than 60% of the stocks are quoting below their 200-day moving averages, which means that they have all entered into kind of bear territories. So I would be very circumspect before calling the bottom of the market.
Let me rephrase the question, Krishna. Given the circumstances that you spoke about just now, I think should it be fair to assume that some things have changed for the market fundamentally too since the start of the year, and therefore it may be difficult for the market to reclaim its highs or strike out meaningful upside in the next few months?
Yes, I think the whole yes, the market situation has completely changed. Let's put it this way, that this kind of geopolitical situation the markets have never seen in terms of US, UK US and Russia being almost at loggerheads with each other, and Ukraine being a part of it. My sense is that the whole geopolitical situation, how it is evolving, I don't think so we have an answer to that question. And that will possibly have a overbearing on the market for some time to come. The whole deglobalization, which was picking up some steam even before this, has also got accelerated post this crisis. How this will pan out, again, we are not too clear. So the markets are in a state of flux in terms of how to value stocks or what multiples that stock should be given, A, in a rising interest rate environment, and B, in an environment where there is too much of geopolitical state of flux. So I think that fundamental shift is happening in the market. Let's put it this way, that in the last 10 years, whenever there have been challenges, you always had the US Fed coming in, giving more liquidity, and the markets were in a positive territory, or there was a kind of a bull market which was always there. But I think that card is no longer been available to us. So the markets will have to learn to live with reducing liquidity and a global environment which is uncertain. So I think to answer your question, that today the market, if I have to look at it, is grappling between whether to buy to value or to be in growth. That is a key question. And also all highly valued stocks where we were always questioning in terms of how to justify those valuations, be it in the tech companies or be it into the consumer companies, etc., globally and locally. I think there is a huge question mark on valuations versus the growth that many of these companies are showing.